In the holiday filled last week, the trade volumes were low and the rupee ended the week at 76.20. The rupee's trend is expected to be more bearish in this week, and the domestic currency can breach the all-time low of 76.2350 to gradually decline toward the 77.00 mark. The rupee had depreciated by 9.40% against the dollar in the previous financial year. RBI sold more than $17 billion to calm the market's negative sentiment on the rupee, and their intervention was necessitated by the portfolio outflows of USD 15.92 billion in March 2020 alone. The last quarter of the previous financial year witnessed a significant fall of 28.57% in the BSE Sensex, impacting the rupee to depreciate by 6.02% in absolute terms against the dollar. As the Indian market entered the new financial year, it has to face the recession in the global economies, and India cannot be insulated from the recessionary impact, at least in this quarter, which could extend up to the end of the current financial year. Many of the international analysts and credit rating agencies have predicted India's GDP growth at 2% or so in the current financial year. RBI shortened market trading hours from 7th April to 17th April for both bonds and forex to 4 hours to mitigate the operational and logistical risks arising due to COVID-19 outbreak. As India has crossed more than half of the lockdown period, it is hard to guess the number of infected cases and deaths due to coronavirus in the remainder of the lockdown period. The currency and stock markets are expected to be highly volatile in the coming weeks. With the rupee interest rates for short-term money market instruments have dropped, the interest rate differential between the US dollar and Indian rupee at the policy rates for the specific maturity of 6 months has contracted, which led to a moderate fall in the 6-month forward dollar premium to end the previous week at 4.25% per annum. Until the virus outbreak recedes in India and other affected countries across the globe, a gradual decline in the Asian currencies is bound to continue. Dow Jones ended lower by 1.69% on Friday after the US non-farm payrolls dropped 701,000 in March and the unemployment rate rose to 4.4%, confirming a recession is underway. The local forex market has to face the hard reality of the rupee breaching the 77.00 stiff support and gradually decline toward the 77.70 78.00 level with intermittent recovery in the exchange rate shall provide a good opportunity to the importers to hedge their short and medium term payables.